There are three reasons why you're going to want to watch this video. The first is there is a major part of the market that is freezing up right now. Number two is the part of the market that's freezing up, is that a canary in the coal mine? Is it going to spread to other parts of the market? Because it is not trivial and it is not small. And then the third is, where should money be placed, right? We're going into 2023. What should the retired person look for? Those are the three things we're going to cover and why they matter. Hey everybody, my name is RC Peck, and this is my weekly video. And the whole point of these videos is to retire strong. And that means not having to worry about the market anymore and knowing that you're okay in retirement, that last quarter or that last third of your life. So let's get to the charts. Let me pop over and let's look at, we're going to start right here. So this is a price chart of Blackstone. Now, I talked last week that Blackstone has a private REIT or a non-public REIT, but I want to just start with the actual price chart of Blackstone. I mentioned last week it manages about $1 trillion of assets. So far this year, let's just take a kind of a reference here. It's down 45%. Now, that's not the story. The story is it's down. It hasn't bottomed yet. It just hit a new lows. The lows are getting lower. The highs are getting lower. This is still solidly in a downtrend. And this is one of the largest asset managers in the world and for sure in the US. So this is not good. When I take this price chart, when I take Blackstone and I just compare it against other asset managers, and I do that right here. And so now what I'm doing is I'm pricing Blackstone in a different currency. Instead of it being priced in US dollars, I literally priced it in the sub-asset group called US Asset Managers Index. And you can see that it is really, really dropping off. And that drop off, in hindsight, you can see it peaked in June relative to all the other, you can see that right here, relative to all the other asset managers. And it's just been trending down. And now it's literally just kind of falling off a cliff. So what's happening? So here's the deal. Blackstone, as I talked about last week, they have a fund. It has basically a market cap of $69 billion. And they're allowing people to redeem 2% a month or up to 5% a quarter. Now, here's the problem. They're having more people who want their money back than they are allowed to have in redemptions. Now, part of what they've been doing is, since it's a private fund, it's a non-public fund, it's a non-tradable fund, they kind of get to make up what their net asset values. They kind of get to make up what the price of all of their assets are. And it's very likely, this is just my thoughts on what's going on here, it's very likely that they've been having to increase their net asset value higher than it probably should be to allow these redemptions to happen. And now more people are just wanting their money back from this private, non-tradable fund. So that is not a good place for Blackstone to be in. It gets better. There's another fund from Blackstone, the Institutional Caliber Private Credit Solution for Income-Focused Investors. Whew, that's a mouthful. The BCRED, okay? This is having redemption problems too. It says it here in this article, this Barron's article right here, that the Blackstone BDC, the $22 billion, think of that as its market cap, also hit its 5% quarterly redemption. People are pulling money out of non-tradable funds, and these companies are not allowing, or they're hitting their limit. And it's not just Blackstone. Starwood REIT, which is a $15 billion real estate REIT, also private, meaning non-publicly traded, also hit its redemption limit. So we have these private commercial REITs hitting their redemption levels. We have asset managers who have private funds that are hitting their redemption limit. That's not a good sign. It doesn't make us feel good that the market's getting healthier, the market's getting stronger. And we don't know where it's going to come from, but definitely when you look at this price chart here of Blackstone, this is just Blackstone priced in US dollars. It is not It's not good. So guys, if you're liking this content, please hit the like button. Please hit the thumbs up. It makes a difference. It helps this video get out to other people. And leave a comment. I read all comments and I reply to all comments. It really does make a difference. And it also helps me understand what you are wanting more of. So thank you for that. So this could be a canary in the coal mine. Blackstone could be the place where this is starting. It's not FTX. It's not Sam Bankman-Fried. That's going to be set over to the side. It might take years to unwind that absolute mess that it is. But this is important for people who want to retire strong because, and this is the key thing, earlier this year, when I was saying it's time to step out, to rebalance out of the market, a lot of people are saying, but I'm going to get into REITs now because they're paying 5, 6, 7%, right? That's what people are saying. I need to go find income. I need to go find income. And that's a problem, right? Because they were chasing income and they went from public, easy, liquid, right, areas of money. And then they went into an illiquid place that they can't get their money out right now. You do not want to be doing that in a period of instability. Okay, what I also want to do is I want to show you 3 news articles or 3 kind of pieces of news that I followed this week that I think are interesting and are important for you to retire strong. And again, to retire strong means you don't have to worry about the markets again. You know you'll be okay. So let's pop over to these 3 pieces of news. So the first one's from Charlie Biello. I'm guessing on the last name pronunciation, Charlie. But he pointed out this week on December 6th that oil now for the year is down. And that's not a sign of a strong economy going into 2023, especially with the backdrop of a land war in Europe. That oil itself, and oil's the major component of the commodity complex, it's actually down for the year. That's not a good sign of stability, world stability, right? That means the world is slowing down. It also means inflation's going to come down, but that was the first half of 22 news. We can move on. Inflation's going to drop down below 5%. The Fed's going to keep the federal funds rate at 5%, and they're going to wait and see. So that's the first one. The second one that I want to show you, what I find really interesting, is by Jurian, and he points out in this price chart, he's basically showing the stock market, which is the black line, and the orange line is liquidity from the government. And he's basically saying when liquidity has gone up, at least over the last 3 years, the stock market has gone up. And when liquidity has gone down, the stock market is going down. You can see that with the orange line. That's full liquidity there. It's both looking at the Fed, repos, and the Treasury's balance sheet. So liquidity is lowering and the stock market is lowering. I think that is something that we have to keep an eye on. Okay, and then the last thing I want to show you, there's a lot of things in here. The last thing I want to show you is just lumber prices. Actually, maybe we'll do 3 or 4. Lumber prices are down basically to pre-COVID. So lumber is coming down now. When people don't build houses, lumber prices are not going up. That also talks about a slowdown that is happening. So we have those 3 stories. Okay, so then just putting it all together and kind of landing this plane. There are cracks happening. There is illiquidity happening in the market. And the sideshow right now is Sam Bankman-Fried and FTX and inflation. The inflation story is done. It's coming down. The federal funds rate's going up to 5%. I think the big story is a lot of people were chased or ran into these illiquid REITs. And I've talked to some of these people who manage these private REITs, these non-public REITs. And what they talk about a lot is, yeah, there's redemption. You can redeem every quarter. And we've never hit a redemption limit until you hit a redemption limit. And 2 of the biggest private REITs are hitting redemption limits, and that's not a good sign. We're seeing the price chart with Blackstone. We're seeing it with that asset manager being down 45% this year. Not a good sign. I don't think it's done for Blackstone. I don't think it's the only canary, meaning the B REIT that they have and their other private fund and Starwood's fund. I think that's just the start. You do not want to be in illiquid funds when the market is unstable. And the market's been unstable this whole year, and we're going to 2nd year of instability. Thank you for being here. Thank you for being in my world. Thank you for watching this. Please, again, leave a comment. It makes a difference. Let me know what you think about those 3 news stories, what your thought is on them. And of course, if you're curious about what a retirement that looks strong, where you have the choice to not have to worry about the market, if you'd like that and see what it looks like, you just get on my calendar, go into the description, and we would talk about what your portfolio looks like right now and why you are most likely losing $35,000 a year per million per year. Thanks, everyone. I appreciate you watching, and I will see you next week.